What's going on, guys? My name is Richard, and welcome back to the weekly watchlist video sponsored by Marketsmith. As always, we'll go through the fundamentals and technicals of all the stocks on my focus list, and if you enjoy my analysis, please go ahead and leave a like down below. It really does help me out and my channel, and also subscribe if you're new and looking forward to more videos just like this one. Now, this week, I do want to briefly go over my process and explain how I find these stocks that I put on my final watch list. And overall, I want to make sure that I start from a strong fundamental point of view, and I want to make sure that all the stocks I pick meet the CAN-SLIM criteria. And if you're not familiar with what CAN-SLIM is, it basically is an acronym with each letter standing for one specific trait of winning stocks. So to do that, I go ahead over to Excel, and I have my sorting mechanism, and I have three rank sheets: my fundamental rank sheet, my IPO rank sheet, and my performance rank sheet. And for each of those different lists, which sort for different criteria, I pick the top 100, 200 of those stocks and paste them all into one watch list in TC2000. And then I go through that list to form my universe list for the week. And to do that, I go through different scans that look like this: price above $15, price is above exponential 65 EMA, and also stochastic is less than 100. And I iterate this one from all the way from very oversold at 10 to 20 to 30, and each time I'm narrowing down and flagging stocks that pique my interest. So when I've finally gone all the way from 0 to 100, I'm done, and I should have about 75 to 50 stocks that go on my universe list. And then from that point, I want to narrow it down to 10 to 20 stocks, usually about 15, that I'm really focusing in on for the next week. And these are a combination of great fundamentals and technicals at the same time. And I double check that using Marketsmith and looking at the fundamentals right here. So I go through, look for high accumulation signs, pocket pivots, high up-down volume, a potential stochastic cross, trendline break, all those different key kind of entry setups that I use. So with that said, that's just kind of a brief overview of what I actually do on the weekends to build this list, and let's get into the analysis. So starting things off, we've got Apps, which is a former stock of the week. So if you want more information about what this company actually does and their kind of moat as a company, go ahead and click the link above after you finish watching this video, of course. But anyway, getting into the video, you can see that the earnings and sales growth is fantastic. Last quarter earnings were up 160%, sales up 93%, and return on equity of 41.7%. And you can see from the annual EPS estimates that it's supposed to have a lot of growth in 2021, up 130%, and in 2022, a further 26%, and the revisions are up as well. And the EPS rating is a 77, the group RS an A+, the SMR rating is an A, accumulation distribution is an A, and the overall composite rating is a 99. And taking a look at the fund ownership, you can see a nice increasing trend, which I always want to see, but you do not have any high-quality funds investing into this company, which is a potential caution sign. And that means that I won't be investing too heavy into the stock because there is that lack of top-tier fund ownership. And taking a look at the chart, you can see that it's pulling back right now to the 21 EMA and holding up relatively well considering we're in a potential correction. And the RS line is basing along with the price, and the overall RS rating is a very strong 99. So with that said, let's talk about the actual technical setup that I would use to trade this stock. So first things first, I like these signs of accumulation. You can see these big up bars, this earnings gap up, and how it's holding the low of that gap up. And the entry setup that I want to see is either a green dot early next week or short-term stochastic cross, an undercut and upside reversal through the 21 EMA, or potentially a break of this downward trend line, a break above this prior resistance level at about 27.20, or above this one at 27.92. And for each of the setups, I could kind of trigger my buys at different entries. So if I buy on a green dot, then I would add more as it breaks through the downward trend line, and then add more as it breaks above this short-term resistance level, and eventually into new all-time highs above 29.56. So as it's proving itself, I'm adding more capital to the position. So that's my plan for Apps. And next on the list, we've got CrowdStrike. And looking at the earnings and sales, you can see excellent growth the past 2 quarters, up 125%. This most recent quarter, sales up 84%, but return on equity was down 0.7%. And taking a look at the annual EPS estimates, you can see in 2021, it's just supposed to be profitable, but in 2022, you can see it's supposed to grow 257%, and the revisions are up as well. The EPS rating is a 78, the Group RS an A-, the SMR rating is a D, accumulation distribution is a B-, and the overall composite rating is a very strong 96. And take a look at the fund ownership, you can see a nice increasing trend, and you do have Fidelity Contra Fund investing into this stock. And as for the chart, you can see that's a bit choppy, especially considering the big drop after the earnings, but it is just out of a stage 1 consolidation and is right back near the pivot for that entry point. And as for the entry set that I would use, I want to see a green dot early next week, and I want to see it hold that key 21 EMA and kind of tighten up and consolidate a little bit more before my entry. And if it does that, I would also add on after it breaks above this short-term resistance level at 134.05. And overall, taking a look at the chart pattern, I like that it's a recent IPO. It's just above its green line, and this is kind of its first stage base after breaking through this long-term resistance level. So that is CrowdStrike, and next up on the list, we've got Fiverr. And taking a look at the earnings and sales, you can see decent revenue growth the past few quarters, and last quarter earnings were up 163%, sales up 82%, but return on equity was down 3.1%. And as for the annual EPS estimates, you can see it's just supposed to be profitable in 2020, but in 2021, it's supposed to increase 232%, and the revisions are up as well. The EPS rating is a 68, the Group RS an A+, the SMR rating is a C, accumulation distribution is a B+, and the composite rating is a 98. And looking at the fund ownership, you can see a nice increasing trend with a big jump this past quarter, and you do have 2 high-quality funds investing into Fiverr as well. And looking at the chart, you can see it is a potential high tight flag with a standard pivot of 126.33, which it's very close to at this moment. And you can see that it is actually almost trying to break out during this correction. And that's really telling for me. That's showing that this stock has something special going on, and it's showing really strong relative strength. And as for the RS line, you can see it's basing along with the price and is near new highs these past 2 days. And overall, the RS rating is a very strong 99. So as for the entry setup, this is a potential breakout, as I said. So I want to see it break above the 126.94 kind of level, which is very close to the high of this point. And I want to see it on above average volume. And I actually already own shares of this stock. I bought it on the actual breakout on Thursday, but I sold half due to it pulling back into the base. But I will add that half back if it breaks out once again. And in general, buying breakouts during corrections is not well advised, considering that they don't usually work. But if the overall market turns back around, this is kind of a beach ball underwater, and it really could explode upwards from the short-term consolidation. So definitely want to watch. And if the overall market shows signs of improving and resuming the uptrend next week, this should be top of your list for a potential entry. Next on the list, we've got LVGO, and keep in mind that this stock's price is tied to Teladoc because of their merger agreement. But overall, looking at the earnings and sales, you can see excellent growth here. And you can see that it's just supposed to be profitable in 2020, but annual EPS in 2021 is supposed to grow 100%, and the revisions are up as well. The EPS rating is a 78, the Group RS is a B+, the SMR rating is a C, accumulation distribution is a B+, and the overall composite rating is a 98. And looking at the fund ownership, you can see a nice increasing trend, and you have 3 high-quality funds investing into this stock. And as for the chart, you can see it's pulling back to the 50 SMA after this kind of messy shape pattern after the merger agreement announcement around here. So you want to see it clear this kind of downward trend line, and let me draw it right here. So through this line would be the primary entry point or above the pivot at 146.68 if this forms a double bottom pattern. So as for the specific entry setup, let's talk about that in TC2000. An early entry would be if it moves up from here and forms a green dot after bouncing off the 50 SMA. Then you could add as it breaks above the 131.62 level and eventually through the downward trend line and into all-time highs above 150. So that's my plan for LVGO. And next up, we've also got another medical related stock, NARI Medical Inc. And overall, looking at the earnings and sales, you can see excellent growth here, especially in terms of revenue. Last quarter, it was not profitable, but sales were up 152%, and return on equity was up 1% as well. Taking a look at the annual EPS, you can see it's not supposed to be profitable within the next 2 years, but the revisions are up. And the overall EPS rating is only a 20. The Group RS is a B+, the SMR rating is a C, accumulation distribution is an A-, and the overall composite rating is an 83. And taking a look at the fund ownership, you can see it's only been in existence for 1 quarter, and you already have 4 high-quality funds investing into this company. Taking a look at the chart, you can see it's a recent IPO and just moved up from its stage 1 base and has pulled back to the 21 EMA and then moved up and bounced off it, showing really good relative strength. And overall, you can see the RS line is basing and moving up along with the price, and the overall RS rating is a 95. And as for the entry setup, I want to see a short-term stochastic cross early next week as it continues to move up, and eventually an add point would be above the all-time high at 84.91. So that is a NARI, and next up we've got NIO. And this was a former swing trade that I bought right around here and rode up to this point right here, but then they announced a secondary offering and it consolidated that a little bit. But overall, it's been showing really good relative strength versus the rest of the market, especially last week. And taking a look at the earnings to sales, you can see that it wasn't really doing much until last quarter. Earnings were negative, but sales were up 140%, and you can see return on equity is not available. And as for the EPS estimates, you can see it's not supposed to be profitable within the next 2 years. And the EPS rating is a 57, the group RS is an A+, the SMR rating is a D, the accumulation distribution is an A, the overall composite rating is a 96. And looking at the fund ownership, you can see a nice increasing trend over the past few quarters, but you do not have any high-quality funds investing into this stock. And taking a look at the chart, you can see it's holding that 21 EMA after a big shakeout on this day and also on this day right here. And overall, it's tightening up really nicely, and the RS line is basing along with the price, and the overall RS rating is a very strong 99. And taking a look at the chart, you can see that I've highlighted this pivot right here and set an alert slightly below it at about 1872. So that would be my first buy point, or potentially a green dot, short-term stochastic cross, shake out below the 21 EMA and recovery, and eventually I would add as it breaks out into all-time highs above 21.05. And overall, I really like this chart pattern, similar to CrowdStrike. It's just moved up from its due diligence phase and is now just kind of resting above its IPO green line, which was at 1380. So definitely one to watch, especially considering those EV stocks are very hot right now, and this should definitely be on your radar. So that is NIO, and next up we've got OTRK, which is also on my list this past week. And overall, looking at the earnings and sales, you can see it's not yet profitable, but it does have very nice revenue growth. Last quarter, sales were up 124%. And in terms of annual EPS, you can see there's no estimates for the next 2 years. The EPS rating is a very poor 11. Group RS is an A+, the SMR rating is not available. Accumulation distribution is an A-, and the overall composite rating is only a 79. And looking at the fund ownership, you can see a nice increasing trend over the past 2 years, but you do not have any high-quality funds investing into the stock just yet. And as for the chart, this is another potential high-tide flag, and you can see that it's been basing and consolidating above the 21 EMA and didn't pull back too much considering the overall market weakness. And the RS line has been moving up and then basing along with the price, and the overall RS rating is a very strong 99. So as for the entry setup, I want to see it break out above this high right here at 79.13. And even though it pulled back and fell back into the base, I don't view that as a negative because it was on lower volume than the breakouts. And this previous day on Friday was actually the lowest volume in really since this entire consolidation. So I think this should be one to watch. And if it breaks out, I think I will buy a few shares as it breaks through this pivot that I just mentioned. Next on the list, we've got Pinterest, and overall taking a look at the earnings and sales, you can see there was nice growth a few quarters ago, but this most recent quarter, there wasn't much going for it. But you can see that the reaction to this most recent one, as they raised guidance for future monetization, that was really telling. Taking a look at the annual EPS, you can see in 2020, it's just supposed to be profitable, but it's supposed to increase 999% in 2021. And overall, the EPS rating is only a 13. The group RS is an A, SMR rating is a C, accumulation distribution is a B+, and the overall composite rating is a 78. And taking a look at the fund ownership, you can see a nice increasing trend over the past few quarters, and you do have 2 high-quality funds investing into this company. And as for the chart, it's tried to break out a few times above this 38 level, but so far it's met resistance up here, so keep an eye out for that. And overall, you can see the RS line is basing along with the price, and the overall RS rating is a very strong 95. So that is the fundamentals for pins, and overall I want to see it break above this level right here at 36.88, and then I would add on a green dot, and then eventually I would add as it breaks out into all-time highs above 39.64. So that is pins, and next up we've got SE, which is also a former stock of the week. This company actually has 3 different kind of components that are very, very promising. So I really suggest you check out that video if you haven't watched it yet. But overall, looking at the earnings and sales, you can see that's not yet profitable, but does have triple-digit revenue growth the past 4 quarters. And overall, you can see that return on equity was down 86.5%. But overall, the big thing for this stock, kind of like Amazon, is that revenue growth. And take a look at the annual EPS estimates. You can see it's not supposed to be profitable in 2020 or 2021, and the revisions are down. The EPS rating is a 22, the group R is an A, SMA rating is a D, accumulation distribution is a B-, and the overall composite rating is an 82. And taking a look at the fund ownership, you can see a nice increasing trend over the past 2 years. You do have one high-quality fund, Fidelity, in there as well. And overall, looking at the chart, you can see it's pulling back and holding just below that 21 EMA, and the RS line is basing along with the price. And overall, the RS rating is a very strong 99. So as for the charts, let's bring that up. And what I want to see is a break through this 21 EMA that would signal that it's about to resume its uptrend. And I want to see a green dot, and then I would add as it breaks out into all-time highs above 165.23. Next up on the list, we've got Tesla, and this is the leader of the true market leaders. And I really think as long as Tesla resumes its uptrend, the overall market will follow. And as for the fundamentals, you can see great earnings and sales growth the past few quarters. Last quarter earnings were up 300%, although sales were down 5%, and return on equity was up 18.8%. You can see in 2020, the estimates are up 999%, although revisions are down. And in 2021, it's up 59%, with the revisions up as well. The EPS rating is a 78, the group RS is an A+, the SMA rating is a C, accumulation distribution is a B+, and the overall composite rating is a 98. And taking a look at the fund ownership, you can see a nice increasing trend, and you have 4 high-quality funds investing into the stock as well. And as for the chart, you can see it's pulled back to the 50 SMA very sharply, and usually you want to see a slow drift down on lower volume, and this is a bit sharp, but so far it's rebounded nicely and is really just sitting below the 21 EMA, and so far that is resistance. And the RS line, you can see, had a sharp drop along with the price, and the overall RS rating is a 99. So as for the entry setup, what I want to see is a break through the 21 EMA and potentially a green dot early next week as it resumes its uptrend and eventually challenges these previous all-time highs above 502.49. So that's Tesla. And lastly, we've got another leader. We've got Zoom, and this probably had the greatest earnings report I've ever seen personally. You can see earnings were up 999%, sales up 355%, and return on equity up 45.1%. And you can see that the annual estimates for 2021 are up 600%, and in 2022, a further 9%, with the revisions up as well. The EPS rating is a 78, the group R is an A+, the SMA rating is an A, accumulation distribution is a B+, and the overall composite rating is a 99. And looking at the fund ownership, you can see a nice increasing trend over the past few quarters, and you have one high-quality fund investing in this stock as well. And as for the chart, you can see it's pulled back very sharply from its huge earnings gap up, but so far it's holding above that 21 EMA and actually found support at the 10 EMA as well. So as for the entry setup, I want to see a green dot early next week, and you could also add as it breaks above the 407.82 pivot that is set this past Thursday. So that's my plan for Zoom, and overall my top 3 subs this week are apps, Fiverr, and also OTRK. I hope you guys found this video useful, and if you did, please go ahead and leave a like down below and subscribe if you're new to the channel. It really does help me out. And if you have any questions about my process, go ahead and let me know down below in the comment section. But other than that, thanks so much for watching. Best of luck next week, and I'll see you guys in future videos.